Investing in the stock market can be a great way to make profits, but it's important to be aware of the risks and scams that exist. Unfortunately, some people use stock market scams to take advantage of unsuspecting investors. In this video, we'll explore what stock market scams are and how you can spot them. We'll also discuss some common tactics used by fraudsters in order to identify potential pitfalls before investing your hard-earned money. With the right knowledge and tools, you can protect yourself from becoming a victim of fraud in the stock market. Unsolicited approaches by phone, email, or text or in person. Unsolicited approaches by phone, email, text, or in person is often a sign of stock market scam. Such scams are designed to take advantage of investors who lack the knowledge and understanding of the stock market. The scammer often uses high-pressure tactics to get investors to make an immediate decision. They may also use false promises and misleading information to convince the investor that their investment is a sure thing. These schemes can cause serious financial losses for unsuspecting investors. Therefore, it is important for potential investors to be aware of these unsolicited approaches and take steps to protect themselves from becoming victims of stock market scams. A hard sell and lofty promises. Stock market scammers often lure investors with hard sells and lofty promises. These tactics are used to mislead investors into believing they can get high returns with little to no risk. However, the reality is that investing in the stock market always involves some degree of risk, and that these scammers are only interested in taking advantage of unsuspecting investors. It is important to recognize the signs of a stock market scam, so you can avoid being a victim. Stock market scams can take many forms, but all have the same goal of taking your money and leaving you with nothing. Common stock market scams include pump and dump schemes. When a company or individual makes false promises about exaggerated investment opportunities in order to get investors to buy their stock at artificially inflated prices. This creates a pump in the share price, which is followed by dump when it becomes clear that those inflated prices are unsustainable. This scam often targets new investors who may be inexperienced with the stock market. No way to call back or follow up with the seller. Investing in the stock market can be a lucrative way to make money, but it is also important to be aware of investment scams. One of the most common signs of a stock market scam is when a seller or broker does not allow for any follow-up or callback once an investor has made their purchase. This lack of contact and follow-up should raise a red flag for potential investors, as it could be an indication that the seller is not legitimate. Another indicator that a seller is not legitimate is if the seller does not have any contact information for the investor. This typically indicates that the seller has no intention of providing updates on how their investments are performing and whether or not they will be able to recover their investments. Insistence on a quick decision. Stock market scams can be difficult to identify, but knowing the signs of a potential scam can help protect your investments. One red flag to watch out for is if an individual or company insists on a quick decision. This could be an indication that they are trying to pressure you into making an investment before you have had time to properly research the company and its offerings. It is important to always take your time and make sure that any investment you make is backed by solid research and reliable data. When you are dealing with high-risk investments, it can be difficult to build a solid case for the value of your investment. However, by thoroughly researching any company or individual you plan to invest in, you can develop a solid case for why your investment has the potential to grow over time. Complicated explanations or use of highly complex terminology. Investment scammers often use complicated explanations and highly complex terminology to deceive investors and make them believe that their investment is safe and profitable. This is done to create a false sense of security, so that the investor will not question the stock's validity or performance. By using language that only a few people understand, scammers are able to hide the truth from potential victims and manipulate them into investing in fraudulent stocks. Complicated explanations also help scammers to confuse investors by presenting false or misleading information about the stock market. As such, It is important for investors to be aware of this tactic and be wary of any investment opportunity that uses overly complicated terms or explanations. Thank you for watching.